P. Funny Shekhar, Fund Manager, PMS at Angel Broking. Hi Funny, good to have you with us on the show. Can't not talk about Infosys to start things off. How do you read into Murthy's comeback as the executive chairman of the company? Is this a significant sentimental boost for the stock, or do you think fundamentally the company is going through a challenging time and that even Murthy is going to find it tough to fix it in the near term?
Good afternoon. Now, whether Mr. Murthy will be able to fix it or not, only time will tell. The way to look at this development is it doesn't hurt the business in any way, right? So, and if it takes care of the confidence that investors and if you broaden the canvas and maybe include all stakeholders, including key clients and more importantly employees, because let's not forget that Infosys is going through a very high attrition number. Now, if the confidence among all these stakeholders increase, it's just good for the business. Now, how far Mr. Murthy is able to play to the expected script and turn around the company is something that only future will tell. But for the moment, since the company, which was a bellwether, had repeatedly disappointed over the last 2 years and was considerably derated because of that, because, prior to Saturday's development and after fourth quarter results, I think the stock had touched a P multiple of around 12.5, 13 times, which was clearly, nobody could have imagined in their wildest dreams about 3-4 years back that there would be a time when Infosys would be available at these kind of multiples. So I think for the moment the re-rating part of the stock to some extent is taken care of, which is being seen in the 5 to 6% rally that's there on the mark, on the bourses. Maybe some more will follow. And I think starting from the first quarter numbers, very tough scrutiny will start.
Funny, what about the rest of the market, which has been quite beleaguered? Do you think it's the rupee weakness which is impacting the local market sentiment, or it's got more to do with the global flavor right now?
Well, we came here in the first place because of global play, otherwise, let's first admit that earnings were better than expectations. So while everyone was expecting a below 5% number because of positive surprise coming out of commodities, you have seen an earnings of closer to 8.5%. Having said that, the market went up to levels of 6,000 mainly on the back of global liquidity. And as and when you have seen signs of weakness out there, we have correspondingly seen ripples created here. So I will not be surprised if we continue to dance to the global tune, because, I don't think anything happening in India, at least for the next 3 months, is going to rattle investors, because we are strongly, at least on a pro-reform note. Commodities are weakening. So while we don't expect a large bout of growth policy coming out of the government, because it simply doesn't have the elbow room, as long as lower commodity prices and more importantly government's revision of its key fuel prices continues, I think we should be doing relatively well. And I think every morning you get up and see what's happening in Far East and US, and that's the way, at least for the next 3 months till October, when the poll bugle will be sounded, that's the script the market will follow.
What about the monsoon? Funny, it's something that the market seems to have ignored. Really, it's on track. In fact, it's hit Karnataka, it's hit Kerala a few days in advance as well. Do you think that the market is probably completely ignoring the fact that has it already priced in a normal monsoon? What explains this indifference?
Well, there are two parts to this question. Has the market really priced in a good monsoon? I think it is there in the overall market valuations. But quite ironically, if you actually look at the segment which will directly benefit from monsoons, apart from the normal FMCG stuff, which is the agri-input ancillary spaces, right from seeds, fertilizers, all the way going up to tractors, that's a space that has not correspondingly benefited. So one would have expected that if the market was expecting a good monsoon, factored it into stock prices at the broader level, and especially on the back of a bad monsoon last year, these would be the spaces that would relatively do well. But that has simply not happened, at least till now, and that presents an opportunity for investors to accumulate stocks in this space.
Funny, what did you make of the auto sales data which has come in this time around and the kind of disappointment we've seen from each and every company?
Well, that was expected, right? Because analysts that you talk to were very confident about FY15 numbers, but they didn't have a clue as to what FY14 numbers would be. So when you are presented with this kind of a scenario where people are trying to justify valuations on the back of numbers 2 years away, it clearly tells you that there is a near-term uncertainty that has not been factored in by the markets. And to give credit to many of these auto companies, they were guiding the market appropriately, where they were expressing their apprehension on the sustainability of some of the good numbers that some of these companies recorded in February as more of an aberration. But if the market chose to get carried away by some of these aberrations, then I think investors only have themselves to blame.
So, Funny, a quick call on the banking pack as well. What would be your top pick in the banking pack right now? Would you hold your bias in favor of private banks as well? Or do you think you could look to buy some select PSU stocks as well?
Well, PSU banks are looking interesting, but I think there is still some more pain to go before you actually go out there and add them to your portfolio. For now, it's the standard large private sector banks which have provided in times of distress prudentially and which are less likely to throw negative surprises as compared to many of the PSU banks. Even if you look at the fourth quarter numbers, some of the NPA figures that have been thrown up by PSU banks are not really convincing. If you actually analyze them further deep, there is a lot of proactive restructuring that has happened, which will sometime in the future will come back to haunt these banks if the economy doesn't pick up in time. So if you are looking at a growth rate of below 6% for the next 2 quarters, I think PSU banks will suffer the most.
The one other stock that I want to talk about, Funny, is Sun Pharma. The stock is tanked now almost 5% in trade today on the back of reports on Friday that the company is evaluating a massive $5 billion acquisition of a company called Meda. While the market has been aware of the fact that Sun Pharma is looking at a buyout, but probably the size of the deal is certainly taken investors by a bit of a surprise. Every time a news of an acquisition, a large acquisition comes, obviously the stock price reacts, and more often than not, it's a negative reaction to news of an acquisition. But how do you read into talks of a possible buyout and its impact on the Sun Pharma stock?
Well, at this point in time, we can only speculate on the surface, which is about the size of the acquisition and what it can do to the business. Now, what it can do to the business, again, is something that will be known only after at least 6 to 8 quarters, because this is a fairly large-sized acquisition. But in the interim, many of the investors who sought a safe haven in pharma stocks, especially Sun Pharma, which has shown spectacular outperformance over the last 2 years, have a reason to be nervous because the stock is not going cheap. It's going at about 24 times. And at that kind of multiple, if the business were to overstretch itself to pay a top dollar for however good the other target business might be, I think the investors have a right to feel that the margin of safety is not being appropriately factored in. And that also explains the initial reaction that you've seen. If the company were to go ahead with this and not appropriately address investor concerns, then I would tend to believe that there might be further correction in the stock.
Funny, good chatting with you. Appreciate you taking the time out and speaking with us today on the show.